Hello guys, welcome to my channel. Here's another day to learn something of value that could actually improve your trading as a trader. And on today, we're going to be talking about fair value gap. As a newbie or someone that has been in the forex space for a while, you will hear a lot of people talking about fair value gap, FVG. And the thing is, um, a lot of people are carried away with all these new ICT concept or way of quantifying some major differences in the forex market, which is normal. But the truth is, don't be carried away with all the grammar, all the names. You hear names like inducement, liquidity, fair value gap as a trader. And if you can understand all of them and apply them and use them, they are good. All right. But all I'm trying to say is don't get carried away with the names. I'm going to do my best as possible to explain to you what I understood by fair value gap and how you can actually apply it to your trading and also take advantage of what fair value gap is in case you see it in the market. So, like I said, if you are new to my channel, please subscribe. And if you like what you're learning from this channel, please leave us a comment and also share our channel with other people. All right, so let's dive in. Now, fair value gap is simply a gap, all right, a gap of liquidity in the market. Now, what do we mean? If you look at this candle concept here, we see this bullish movement, and we notice that these three candles, like 1, 2, 3, they do not what meet. Normally, look at how this candle formation was forming. We have a open and a close. We have a open and a close, and they were meeting, right? We have a close and a open and a close. So all these candles were meeting, but notice how this one moved. When we have this movement, we do not have a proper close there, but price started from here, and we have this, and price do not kind of give us a good close, but we have this candle started from here, and we see this happen. All right, so when you see this kind of movement in the market, it's known as inefficiency or imbalance. Price do not close or fill the gap properly. All right, so we have this space, okay, and it's a gap, and it's that gap that ICT call fair value gap. And it's liquidity gap most of the time, meaning we have a lot of buyers in the market at this particular time of this movement, but we have less sellers participating in the market. All right, and it was not supposed to be so. So what this actually do is, because we have this huge movement in the market that leave this kind of space, all right, traders or institutional traders believe that this is not normal movement, so they are kind of going to be expecting price, all right, so sort of trade back into this space, fill it, get in new orders to correct the market, all right, and do what? Trade to continue the price. All right, now as you know, this is not an actual candles body the way I illustrated this, so I'm going to be doing that here to actually create it in a way whereby it will look like in the market most of the time. And also we can see this more like the sell side, which is the bearish side of fair value gap. All right, so normally you were not supposed to have sometimes a body like this kind of situation was supposed to be more like a week, and also here a week. So let me just show you what I mean by that. We can see this candle, all right, then we can have something like this again, creating another candle for us, for example, but this time we are not going to be having it as a body just like I painted it here, but we may see this place more like a week, and also have a week here. All right. Okay. So notice this, and we have another candle giving us this. All right. So if you notice very well, this very one, we are not supposed to have this week here to be a body. So notice this is how the candles actually form most of the time. All right. Now, if we should look at this space, now you notice that the bodies are not connecting. We have a space there. Now, when you see this kind of space, and maybe this happened in a downtrend, so let me change this color to red so we can know that this is a downtrend. So we are looking at a red candle. All right. So when you see a situation like this in the market, this is what ICT actually call fair value gap, because, or liquidity gap. Now, these movements are not normal, all right, because as as I've already told you guys in my previous video, that this market is made up of buyers and sellers, and simply because we have buyers and sellers participating in the market, we are supposed to have every order properly filled before price will move. So when we have a situation like this, all right, that price move like this and leave this kind of space, we believe, or institutional trader believe, that price is definitely going to be what? Trading back into this space. All right, trading back into this space, 50% of it most of the time, and continue downward. So let me just, for example, we break and we trade to this level. We may see price do what? Like I've explained before now, trade all the way back to 50% of it most of the time, 50% of this candle. Then from this place, sometimes form a change of character, react from here and continue to trade downward. Now, in the bullish market condition, similar scenario may apply, like I've already showed you guys, that we may have candles like this. All right. And this happen in different form. All right. You guys need to understand that it may not be exactly the way I'm actually creating it now. Sometimes this candle actually happen as form of market gap that's open. So sometimes if you notice a forex trader, the market may close on Friday and market may open on Monday, and you see a huge gap in the market from the opening price, all right, from the closing price of on Friday, but on Monday you see a huge gap that actually happened in the market. And sometimes those gap is also a fair value gap. I will show you guys instance, all right, from the live market. Once you see, sometimes I'll give you an idea. For example, let's say today is Friday. All right, let's say today is Friday. Price close here as, let's say, a sell. So let me make this a red candle. All right, we have opening and close of the week. All right, now sometimes you just see that price will open, and instead of the price continue the normal way, price will just jump, give a huge gap, and start trading from here. If you've seen that before, you can tell us. So price close here on Friday. All right, notice this is our closing price. Closing price, which is this line that we have here. Price closing on Friday, and on Monday you see price open. Instead of opening the normal way on Monday, price jump to come and open here, leaving this whole space here. All right, and what you see is most of the time, 90% of the time, this whole space here, price will come back. All right, if not that same day, sometime another day, price will still trade back to come to this level or even above it, and you still start seeing price doing something like this. What is happening here? Pardon me, guys. I don't know what happened. So like I was saying, so sometimes the fair value gap we are talking can happen due to what? Market opening gap. All right, some can be this. All right, so there are different forms that this market FVG, fair value gap, happen in the forex market. So as a trader, you need to train your eyes to see all these possibility and options or ways that this fair value can actually occur in the forex market. All right, when you do that, you're going to have a better understanding of what we actually mean by fair value gap. So the only thing you need to take out of this video is you need to understand that whenever we have a fair value gap, there is every possibility that price will do what? Trade back to that fair value gap. All right, trade back to it and use it as a means to continue the trend. That means price will go there, fill it. All right, after filling it, we can then start seeing price continuing in that direction of the market. So it's very important, very, very important that sometimes you pay attention to it. And that's why some people add this as a confluence to their trade to create their trading decision. All right, so there are different ways this fair value gap can happen. Like I told you guys, you can see it here. It can happen in this form, it can happen in this form, it can happen in this form. But the moral of the story is, whenever you find a fair value gap like this, for example, now if it's a bullish market, know so well that price will do or trade back into this place, 50% of it, or even fill it, then form a kind of change of market trend here and continue to the upside. While on the bullish market side, expect price to trade back into the fair value gap, create a sum of reaction and continue to sell. But this do not happen 90% of the time. You need to understand that this may actually happen in key levels, in key zones in the forex market, not just everywhere. So let me just quickly go to the chart and let's look for some fair value gap. And it's better you look for fair value gap from the higher time frame because they are more strong. All right, for example, now you can see this one here. It's a typical example. Can you see it? Notice these three candles, 1, 2, 3. You see them? You see that I marked that place. And what is price doing at this moment? Let me just delete this for you guys. All right, let me remove all the drawings here so we can see it clearly. So if you notice, you can see that price trade into that space here, and what are we seeing? We are seeing price reacting from this space, trying to give us what? A change of market direction. All right, so you can safe to say that if I have a change of market structure around this place, as a result of this fair value gap. You see how price traded below all this way, but I tried price to trade back into that place, and we are starting seeing some sort of market reaction at this level. And this pair is one of the pair I'm actually looking for a market shift around this level. If I should find that, I'm actually going to be looking for sell opportunity on this pair, but I need to have a confirmation entry before I can actually do that. Now, if you also notice, all right, I want to look for another fair value gap. This is another one here. Notice here, these three candles, 1, 2, 3, they do not align. Now notice how price do trade back into it, and we have this kind of sell from that level. All right, but notice these three candles, 1, 2, 3, they do not touch. There's a space including this one. All right, but you see how price trade into that zone and price drop. So a lot of traders look at these key levels, especially after we have a break of market structure. When we have a break of market structure and market move aggressively in an abnormal way, all right, and we see a fair value gap in a such space, and that zone looks like a key zone, traders will tend to wait for price to push to that level, and if they see a sort of market reaction from that level, they will actually add that as a confluence to take their trade. So fair value gap or liquidity gap are just gap in the market that fail to fill orders the right way, and when price go back to those levels, traders tend to use those levels to form their trading entry or trading decision. All right, so I'm trying to look for a proper one I can show you guys on a bullish market condition. We can see one here. We saw how this three candle move, and we see how price trade back into it. See this candle 1, candle 2, and candle 3. You see that it did not touch around here. So we see price trade all the way back, fill it completely, and we'll have that movement. All right, so that is another one. And you can just go through the charts, all right, train your eyes to see those kind of spaces in the market. And when you have any, you can see this one here, 1, 2, 3 candle move aggressively, they did not touch. So if I should zoom in, you see price came back to that space, fill it completely, and you saw how price reacted. So they are in the market all the time. All right, so as a trader, just go through this video, understand the concept behind fair value gap or liquidity gap, and understand that those positions are positions that always will likely attract price in the future. There is one here as well. You can see these three candles, 1, 2, 3. They did not touch, all right, but you saw how price came back to come and touch. You see these three candles, see this space. If I extend, you will see it. You see that price reacted from that level as well, because we have these three candles that do not have a connection or close properly before we saw that bullish movement. All right, so you can see that space there, and when you extend it, you see that price reacted from this level. So this is the way you can use fair value gap. All right, try to use it in major key levels, and they're going to help you form a better trading decision. So I hope you learned something from this video and how you can actually apply fair value gap into your trading concepts, use it to actually form your trading decision. And if you do, leave us a comment, subscribe, share with friends, and see you on my next video. Thank you.